Hello, my name is Alex Haigh, and today's video I'm going to be going over a general real estate market update, starting first with our area down here in Southeast Florida. Then I'm going to branch out into the larger part of Florida. Then I'm going to go into all of Florida. Then I'm going to go into a national housing update, what the state of the market is. And in my belief, one of the things that's coming is going to continue actually to move the market up. We've got a little bit of a bump down right now, but I do believe the trend's going up. I'm going to show you some statistics, and this first one I'm going to show you is a really interesting statistic, so let's dive into it. All right, so this is a really incredible stat. This actually came from Redfin. Now, U.S. home turnover rate in the first 8 months of 2024 was the lowest it's been in 30 years. So that's over the first 8 months of 24. Going back those 8 months of the last 30 years was the lowest sales in U.S. history. The turnover, only 2.5% of U.S. homes turned over in 2024. Now, comparing years, this is 37% fewer homes sold in 2021 when the pandemic was at its full swing. Also, it's 31% fewer homes sold right here. It's 31% fewer homes sold in 2019, which was pre-pandemic. So what we're seeing here is an incredibly challenging market, both for buyers for these high interest rates and the real estate agents out there. Our team is doing great because we do a lot of prospecting. But let's dive into this next statistic. Now, this is part of why we've had this challenge. I wanted to show you going back here almost 20 years, all right? So interest rates going back to 1995, back when I was, in high school and college, they were up in the 8%. Now, they did start to drop and spiked a little bit in 2000. They just continued, interest rates continued to drop. We had a couple of little bumps up here through 2006, through, the giant real estate boom that we had then, and then started lowering interest rates right here in 2008. This is where it really started to precipitously drop. And you can see the interest rates dropping, all the way down here to 2020, where they were actually at the lowest at around 2.65 is where they hit their bottom. And then you can see, I remember this one little here in 2015, where actually the phone kind of stopped ringing. And, we have some people on the team that were in the mortgage industry. There was a massive amount of layoffs during this time. This little bump up in interest rates right here. Now they dropped again, and this, was through the pandemic and so forth, and then they spiked up. So you can see this massive ascension in the interest rates, and that's what's causing so much challenge here. Now, we're kind of hoping, people in the industry and a lot of the buyers out there are hoping that, we'll start to see interest rates drop, and, they have. We'll see where that goes. Now, I wanted to show you this as well, because this is why they're lowering and raising interest rates. This is a consumer price index. So this is a basket of goods, everything from bread and those kind of things. Now, you will notice right here that it's 45% of this is actually shelter. So that's rentals, not home purchases and that. So what it does is it calculates the level of inflation. But you can see as those interest rates dropped, right? Consumer price index did go down because this was the pandemic, but then inflation really started to take off according to the CPI, and then hit its kind of top here almost at 9% CPI interest, which is percent rather, which is how much goods have gone up. So they had to raise interest rates to stave off demand, and this did start to drop demand. And that, so then they started lowering interest rates in here. So we'll see where that goes. Now, let's dive into, I've done this before. Let's dive into, this is Florida, right? So this is all single family homes, condos, villas, everything, all right? So that's 49,000 units as of September of this year, 49,000 units for all of those units put together. This here is the closings. So we had 6,022 closings. And that's pretty low compared to what you see across here on the bottom. So September, third quarter is always slow in Florida because people have moved for school, and the snowbirds aren't thinking about coming down here during the heat in September. So my point here is you can see this escalation of inventory, okay? Now, let's go down here to this is the average price per square foot sold. Very, very interesting that you can see, the escalation of inventory, right? New properties coming on the market or staying on the market. You would think that this would drop prices. Prices actually kept continuing to go up, but they did reach kind of a top here in April at 448 here, and then they did start to drop, and then we got this little bit of a bump up here in September. So this bump actually shows in some of the other graphs here that I'm going to show you, but let's just go here to this is the original listing price to sale price. You can see it's in the 90 percentile here. So people are getting on average of 91% of their original listing price to sale price. So kind of putting it into a more simple context, if you listed a property for 100,000, on average they were selling for 91,000. The original listing price was 100 and they sold for 91. That would be 91% of the original listing price to sale price in that ratio. So you can see here too that the average days on the market has stayed pretty level. We did bump up a little bit in September. It's not really raising a lot, but it's staying pretty steady at 60 days on the market. The average days on the market in the United States is about 76 days, so we're under that. This is the thing that's a little bit scary here. This is showing us that we've actually moved into a buyer's market here in September of this year. 7.9 months of inventory. Under 3 months of inventory is a seller's market. Between 3 and 6 is neutral. And over 6 months of inventory is a buyer's market. So technically, right now, Southeast Florida, all homes put together, condos, villas, everything, properties, we're at 7.9 months of inventory. That's a buyer's market. All right. So pay heed to that. Now, will that change? That's a big question. Let's dive over here. This is the same region. This is the Southeast region. So I'm going to branch out into the rest of Florida and the nation here in a second. But I wanted to show you the condo market. This is something we want to keep an eye on for sure. So we had 30,000 units. You can still see that same ascension because all of these are loaded in with the single family homes. This, I took out the single family homes, but it has a similar ascension, which actually is probably bringing the single-family home market up more than the total market. So 30,000 units, 3,100 pendings, 2,998. These are all a little lower than previous months. So you're just not seeing as much absorption of that inventory. Now, let's look again. This is our average price per square foot. What does this tell us? Well, again, we have a very kind of just not congruent with inventory going up. Usually as supply would go up, demand would go down, it would suppress prices. It just didn't in here, and it's so odd, but it didn't. But this looks more, see, this is much more of a drop than in those single family or the total market. There's much more of a drop here. We did get this little bump going from August to September, so to 363 a square foot to average of 365 a square foot. So let's keep an eye on that. It looks like it's kind of stopped that drop. We'll see. Again, here, this is the original listing price to sale price, same 91%. Now we're another 11 days on the market than that 64. Days on the market's creeping up, still getting close to that original listing price to sale price. So we'll keep an eye on this as well. Let's move on to the total month supply of inventory. This is where it gets a little bit scary. 10.5 months, almost a year of inventory. Now, we were in a buyer's market in August. We were in a buyer's market in July, June, even in May, even all through here. This has all been in a buyer's market for the last almost 9 months has been in a buyer's market. So pay attention to that. Now, this is called Stella MLS. This brings in more MLSs for the state of Florida as an aggregate. You can see, we got almost 20,000 more units to look at from data here. It levels off a little bit more than Southeast Florida, and I think this has to do with there's more single-family homes in Stella than in regional or our MLS down here, Flex. So I think that's why that kind of peters out right in here, and this is a good thing for the total state of Florida. Now, we still are a little bit below on pendings, what we had for the Southeast region. And, but we do have more closings as a total, which is healthier for the state. This is a little bit more level because I think we have more, I believe we have more single family homes in here that are keeping those values a little bit higher because this is the total. Obviously, the average price per square foot, we saw a little bit more of that kind of ascension towards the end of second quarter. And in third quarter, it dropped off. But we got this little bump right in here that we may have bottomed out there in August, but only time will tell on that. Now, moving down to original listing price to sale price, a little bit more for the total state. See, we got 93% of the original listing price per sale price and about, 8 or 9 days less on the market as far as 65 days here. And you can see in here, we're in that 60 days-ish, low 60 days as far as average days on the market. So moving down, here's some good news for that kind of larger portion of the state. We are at 5 months of inventory. So that's a neutral market, right? So that's a neutral market. And as you can look back here, most of this was low neutral. And then we have to go all the way back here to last year as of September to get back into that seller's market. So mostly neutral, but trending up. So keep an eye on this, and we'll show you here in later videos what happens in future months. Now, let's come over here to condos, villas, townhomes in Stella. So we got 16,000 units. We got a little bit more of a leveling factor here going across all the way from May, right? But the pendings have dropped and gone down, and closings have gone down as well. So a similar thing to what we're seeing to Southeast Florida in that condo market, but not quite as dramatic. You see what I'm saying here is that we don't have as many condos in the Stella MLS. Now, this bumps around a little bit more. We didn't have as much of that ascension in here, but we did get the drop in third quarter. So we'll keep an eye on this. Hopefully similar to the others that we bottomed out maybe in August. We'll see. Maybe this will bump back up. We'll see how those October numbers come in. Now, moving down here, we like to look at our original listing price to sale price, around 93, whereas in Southeast Florida for condos, it was 91. So getting a little bit more on average price per square foot, but those days on the market is up there around 72. So we're getting close to that national average. It is got a subtle ascension up here. So we'll keep an eye on that as well. Now, moving down here to our month supply of inventory, which is probably one of our best indicators of where the market is at. We got 6.8 months, so we officially went into a buyer's market in that condo, villa, townhome in Stella MLS. So similar, not quite as high, right? Not that 10 months of inventory, but we do have 6.8 months of inventory. So pay heed to that. Let's get into the national housing market here. Now, the median sale price for a single family home in the United States, these are national housing stats, is $447,000. So it's actually up about 4% since this time last year, year over year. 311,000 new homes on the market, actually down about 4%. So not as much housing inventory coming on the market. And then that's our national interest rate. Now let's look at the demand here. Now, actually, homes sold above listing price, about 28.5%. So still around the country, they're getting over asking price, but it's still down about 4%, about almost 5% since this time last year. Price drops. We got 20% more price drops across the United States. That's about 3% down. Sale to list price across the country, people are getting on average almost 100% of their asking price. So, and then we got, of course, our last one here, that migration map. This is national, and I showed you this on others. So let's dive into kind of some trends here that I see happening with the housing market, with equities, with some other assets. Let's dive into it. Let's get into what Redfin says. Now, they're able to pull all of the MLSs from Florida, and we're going to get into the national here in a second. Now, the median sale price in Florida for a single family home was $428,000. Now, number of homes sold were down. It was 19,704. We're down 12.7%, so we're down. Now, median days on the market, 59 days. That were 17 days year over year. So that's where the actual supply is at. Now let's look at demand. It's interesting. We actually had 10% of homes sold over asking price, but that's actually down 5% year over year. Homes with price drops, so we're up 28% in price dropping, right? So that's 1.5%, similar amount that was price drops as of this time last year. Now, sale to list price on average, pretty healthy, 96% average listing price to sale price. So pretty cool there. And now I want to show you this. This is, I think, is an important thing to look at here. This is a migration map, all right? So this gives us an idea of where people are moving from to where people are moving to. So what you can see here, Florida with this burnt orange color, 23,000 people are searching to move to Florida. These are kind of, general numbers, but they give you an idea of heat maps. They take this from like U-Haul and some of these services that help people move. But you can see some of these states with the, I'm colorblind, I think this is a dark blue. That's 32,000 people looking to move out of New York, people looking to move out of Massachusetts, people looking to move out of Connecticut, people looking to move out of Pennsylvania. Look at California, 48,000 people looking to move out of California, people looking to move out of Washington, just to give you an idea, right? But we are, as a whole, the state with the largest influx of migration. So pay heed to that, because I think that's a trend. We're at the highest state that people are migrating to. So if that trend continues, I see that these people are absorbing this inventory that I just went over. Now, let's come over here to the Florida condo market. As far as Redfin is concerned, they're saying the median sale price is $293,000. The number of homes sold, so that's down. Just that down. I kind of want to come back to this. That median sale price is down 7.3%. So, if you own a condo in general in Florida, you might be down about 7%, but can't lay that over. Real estate is a very area specific. So that's why you need a good agent to look at your area, inventory, market analysis, all that kind of stuff. Now, number of homes sold, it was 4,000. This is condos. 4,013. We're down 30%. And median days on the market, they're saying it's 95. So, take this with a little bit of a grain of salt, but I do think it's important to look at. Now, let's look at the inventory. This is the supply. We've got 189,667, as we see right here. And that's up 29% more property on the market. New listings. So these are listings that come on in like the last 10 days. That's 39,118. It's down 7.4%. Now we go over here to our month supply of inventory. Remember, let you know that under 3 months of inventory is that seller's market. Between 3 and 6 is neutral. Over 6 months of inventory is that buyer's market. We're just on the edge of a buyer's market here, all right? Now, let's look at demand. Homes sold over this time period, 10% over listing price, rather, down 5%. So similar to the other number that we went over there. The last, single family homes as far as Redfin's concerned for Florida. Now, homes with price drops were down 28%. That's 1.5% year over year. So you're getting a lot of price drops, but people are getting on average 96% of their original listing price to sale price. So pretty good. Now, same thing here, just going back to that migration map, same. Okay, now why is all of this happening? Why is all of this happening? Let's get into this. I want you to see if you can see a trend here, all right? Now, I went on to ChatGPT and got a nice graph here of the simulated median home price. This goes back to 1996 here. Okay, so basically we go from left to right up. And this is a nice, what we call logarithmic trend, which means the log goes up, it may bounce down, it bounces up, but it's going up and to the right, okay? So that's the median sale price of homes since 1996. Okay, so look at that up and left and to the right. Now let's take a look at that consumer price index. Looks pretty similar to home prices, right? Going from 1995 here, left to right, the CPI going up, all right? So that's that basket of goods, bread, all that kind of stuff, but also runs pretty much similar in line to that median home sale price, doesn't it? Let's take a look at some more graphs here. This is gold. I don't know if you're a gold bug or not, but my point here is that gold is considered a hedge against inflation. So I thought it was good to put in here since we're talking about inflation. We're talking about assets as well. A home is an asset. It kind of bounces around a little bit here, but what does it do? Goes left and right and up. Gold just hit an all-time high last week. Something we might want to take a look at. Is there a trend here? Let's take a look at the S&P. This is interesting. This goes all the way back to 1880 when the old S&P started. What do we see here? Looks like up, left, and to the right. Now, there's a couple of bear markets in here. There's some bull markets in here. You know, there's September 11th. There's the great financial crisis, which was in here. And then we took off into this bull market going back here, 10 years. We've been on this big time left to right and up. So looks like another trend to me. Where could this trend be coming from? I wonder. This is the money supply. This is called M2. So this is basically the calculation of money or currency injected into the system through stimulus and different ways of simulating. We won't get into that. But gosh, this is a really straight line going from the left to right up. So as the money supply goes up, do you think there might be a correlation between home prices, the S&P, gold, maybe throw some Bitcoin in there, NASDAQ? I didn't put the NASDAQ in here, but it has a very similar ascension. So this is going up from left to right to 2024. Now, what are the projections? Lastly, what are the projections for continued money stimulation? This is 2020 starting here, and these are the projections. So the projection is for more money to be injected into the system, fiscal stimulus. And do you think that this, if we could project what home prices will do, if we could project what CPI will do, if we could project what gold and Bitcoin and these other assets will do, maybe. So I leave you on all of this with thoughts to share with you that I believe that we're going through a little bit of this downturn. And that first statistic that I showed you, that year over year, we're down 30%, right? That's a big number. So, I mean, we're not down 30%. We have the lowest amount of U.S. home sales in that 8-month period, year over year, going back 30 years. So I think that this overlays, hopefully, this money supply, interest rates going down, which indicates that money will get cheaper, and that will drive more CPI, because as money gets cheaper, people get more dollars, they spend more. That's the stimulus. That's the thinking of modern monetary theory, which I won't get into. But it basically is the belief that Keynesian economics is that they believe that when the economy goes into recessions, you stimulate. But what you're supposed to do within Keynesian economics is when you then stimulate and the economy grows, you use the excess growth to pay off the debt. What didn't happen? The debt never got paid off. So the debt keeps growing, which is kind of getting a little bit out of control. But that's another story for another day. I hope this is helpful for you to kind of tie all this together and say, is buying a home now a good idea? And I think if you're looking the long term, that maybe the short term little thing here of these bumps down, market's going to crash. I just don't think the market's going to crash. I used to think that a while ago, but I don't think that anymore, because I think that there's just going to be more cowbell. There's going to be more, anyone knows that reference, but there's going to be more cowbell, which is going to be more stimulus, which is going to create more inflation of assets, bread, and all that too. But everything is just going to go up, in my opinion. So I do think buying a home, and whenever you can buy a home, however you can make it work, it's the only way to protect your purchasing power to buy some kind of asset. And if you can leverage money, I don't care if it's at 5% or 6%, don't be waiting around for 3%. That's not going to come for quite a while, if it ever does. So I think now is as good a time as any. I think there's opportunities, which I showed in here. You buy in a buyer's market and you sell in a seller's market. Right now, for the most part, we're in a high neutral market, and in some areas, we're actually in a buyer's market. So if you buy in a buyer's market, now's the time. Hope you like my presentation. Drop a comment below if you like this kind of content, or if you think that there's something I could do better, or if you have a contrarian belief to what I have here. I'd love to hear your thoughts. I'm always open. I don't need to be right. I just like to learn and grow. So hope this is helpful. We'll see you on the next video.